Amrita, we're good to start.
Yes. Hello, everyone, and welcome to the Future of Finance is Green, an Oxygen webinar supported by APIX. Thank you so much for your overwhelming response. We have attendees from over 30 countries representing 5 continents. This really just goes to show that we are united in our interest and belief in working towards a better future for our planet. So thank you so much for being here. I'm your host, Amrita. I usually host the Green Room FinTech series, but today I am so excited to be here with changemakers in environmental sustainability and finance to discuss how finance is going green. First, we'll hear from 5 green tech entrepreneurs from Denmark, Sweden, and New Zealand about their startups and implications for finance and, of course, the environment. Then, for the second half hour, I'll turn it over to 3 incredibly well-known thought leaders in finance and sustainability for what I'm sure will be a thrilling conversation. Let's jump right in with our panel of entrepreneurs. They've each got exactly 4 minutes to share with us what they do, how they do it, and importantly, how financial institutions can benefit by adopting their solutions. Let's go ahead and get started. Kristian, CEO of Normative from Sweden, over to you to begin.
Hi, everyone. My name is Kristian, and I'm the CEO of Normative. And our vision at Normative is to make known the sustainability impact of all economic activities on the planet. Because in order to avoid a global climate catastrophe, we need exponential climate action. According to the Paris Agreement, it means we need to slash our emissions in half every single decade. It's non-optional and non-negotiable. But in order to get there, we first need to monitor our emissions. First, sorry to interrupt, but are the slides on? Because I can't see them.
Yes.
All right, perfect. So yeah, I think I should be at slide 2 or something. So anyways, what we do at Normative is that we help our clients, which are usually mid-corp large companies, to account for their greenhouse gases. And the way we do that is to analyze their financial data, because embedded in the financial data is how much they have spent on fuel, utilities, transport, travel, and various raw materials. So if we can go to the next slide. So how it works is that they upload their financial records, their invoices to Normative, and based on that, we categorize the invoices, whether it's fuel, utilities, or whatever, and then we assign a greenhouse gas value to each activity. And based on that, we present actions and an action plan for going net zero that our clients can take and follow. Next slide. So by analyzing the data, they get access to dashboards and analytics where they can really see on a super granular detail the emissions of all of their projects, activities, and so on, and more importantly also emissions from the supply chain. Next slide. And we have been around for several years. So we have over 100 large companies that are currently using the platform, and together they have helped mitigate 0.5 megaton. And you probably don't know if that is high or low, but that is the equivalent to the entire annual greenhouse gas emission of a country like Gambia. It's a fairly small developing country, but the fact that we're having an impact on the level of a country, we're super excited about that, and our clients really like the product for that reason. So if you're interested in Normative, please contact me, and yeah, let's make the world a little bit better and greener, one greenhouse gas calculation at a time. Thanks a lot.
Kristian, thank you so much. I think we'll move to CarbonClick. We've got Dave here from New Zealand.
Hi, how are you guys? Hi, my name's Dave Rouse, and CarbonClick is the business that I represent. What we're trying to do is to help restore the planet with a simple click. And we do that through e-commerce and through FinTech. And we would like to be, as a vision, the green button of choice that consumers click to convert their emissions into offset options which genuinely help to restore the planet. Next slide. So there are three ways that, there are two ways that we genuinely, we're jumping between, sorry. So on an e-commerce, it's a simple green button that appears on the cart. So Magento, WooCommerce, Shopify, and custom carts. Just like when you're booking a flight with an airline, you can choose to click the green button or tick a box, and that offsets whatever it is that you're purchasing. And if you don't know what your carbon footprint is for that item, like a lot of stores don't, we can help direct you to sustainability consultants or other platforms that can actually calculate that. But even if you don't know, it's quite easy to put a simple $1 or $2 offset, because your customers know they've got an impact and they want to drive change. The big thing that we're driving behind this is the transparency of showing you exactly where your carbon dollar has gone and exactly where your what the impact of those projects is. Loyalty points. So we've just gone live with New Zealand's largest loyalty card provider called AA Smart Fuels. And this is the same concept as Visa cards. We're quite able to convert your points into offsets so that as you're spending, instead of earning other rewards, you're actually offsetting the impact of those spends. We provide progress reports and education to show you why what you're doing is helping, and that helps to reinforce the cycle. And from a business perspective, we make it easy for a business to put these plans in place. If a business put these plans in place, their customers become great advocates of them. They feel empowered, and they continue to do more positive purchasing, conscious consumerism, and so on. Next slide. So we know that offsetting is not the only way to get us through this climate emergency. It's simply a second step. So we only work with businesses that are actively avoiding and reducing their emissions. And this is critical because we can't buy enough offsets globally to fix the problem we're in. It has to be addressed by both avoiding and reducing, and then offsetting. And offsetting is that powerful tool that can do more than just restore carbon equation. It can actually restore biodiversity and improve social outcomes as well. Next slide. So far, we're only just under 2 years old, and already we've had over 50,000 people use the platform. We've got 745 businesses online with us displaying that green button, and that equates to about 639,000 trees that have been planted, supported, or saved as a result of clicking that green button, really. Next slide. Oh, sorry. So hopefully that's given you a bit of an insight as to what we're doing. And obviously we'd like to talk to other businesses out there that want to partner with somebody that can help them on their sustainability journey from a perspective of, if they're already doing the right things to reduce, we can help them complement that and boost that, as well as bringing their customers into that journey. And that might be through climate-friendly products or climate-positive products or carbon-neutral products in collaboration with consultants, or it could be through loyalty reward schemes, or just consumers participating with the e-commerce site that you're selling through. Thanks very much for your time.
Thank you very much, Dave. We'll move on to Niels from Matter from Denmark. Over to you, Niels.
Thank you very much, and thank you so much for having me. I'm Niels. I'm co-founder and CEO of Matter. What we do at Matter is we help asset managers and asset owners understand the sustainability of their portfolio. We want to help them make capital worth more by getting a better perspective of how sustainable their portfolios are. Of course, climate environment is a big part of that, but sustainability investment also concerns a range of other areas, ranging from human rights to governance, tax, and so forth. The next slide, please. The core logic for us is we want to utilize the wisdom of the world around us to get a better perspective of how companies are performing on environmental, social, and governance criteria. We gather data both from what companies themselves report, but also from what the outside world is saying. One is through what we call trusted sources. So this is NGOs, civil society, academia, think tanks, and other experts that have a qualified perspective on how companies are performing with regards to key ESG issues. We also read on average 65,000 articles from global media on a daily basis to understand whether companies are being praised or criticized for their actions with regards to sustainability. The important part here is for us getting a balanced perspective in a world where there's a lot of different frameworks that investors have to take into account. We cover a global universe. We cover more than 14,000 companies, which means we analyze portfolios for investors also with a global reach. Next slide, please. The data is made available in different ways depending on the use case. So one is for an API solution, so that data can be integrated directly, for example, in your quantitative trading models if you want to utilize our sentiment data to improve your portfolio. It can also be integrated as UI UX elements if you want to enhance your user experience. And we're also launching a digital dashboard for our clients to interact with our data in a simpler version. Next slide, please. What we're helping our clients do is help create, launch, monitor, and report on sustainable investment products. We launched the first 2 sustainable pension schemes in Denmark 3 years ago and have attracted more than $100 million to those products. We've also launched the first digital platform in the world that allowed retail pension clients to track the carbon footprint of their pension plans. And what we learned from that was we actually were able to build an entirely different value proposition towards our client that our competitors have. Over time, we started providing more and more institutional investors and professional clients with sustainability information and reporting of their solutions. And as an example, we just published a project with Fidelity that we did together with IMA's digital acceleration program to help them build a digital solution to measure the sustainable impact of an investment fund on ESG criteria and be able to communicate that to external clients, whether professional or private clients. Thank you very much for your time, and I look forward to hearing about the other panelists.
Niels, thank you very much. We'll move on to Earthbanc with Tom, the CEO from Sweden.
Tom, you're on mute.
Tom.
Thank you very much. Yeah, it's great to be here. I'm Tom Duncan, the CEO of Earthbanc. It's great to be here, and we look forward to sharing with you how we're working with fintechs and banks to transform carbon and ESG reporting and sustainable finance. Next slide, please. The core of what we do is delivering services to banks, fintechs, corporates, and SMEs on carbon and ESG reporting. So we deliver really precise reporting on these metrics using a range of data using open banking APIs, also decentralized data points that are harder to get. And also we use satellite remote sensing and monitoring in partnership with the European Space Agency. That's step 1 in our process. Step 2 is sustainable finance AI, where we help deliver sustainability loan suggestions to our bank and fintech partners. For the third step, where there's unavoidable emissions, we help audit offsets from VCS, Gold Standard, and other platforms, and deliver them via an API into banks, fintechs, and corporates and merchants. Okay, next slide, please. Here are our products. A key deliverable that we help scale is we deliver new green loan sales leads for our bank and fintech and lending clients. We report on the carbon and ESG impacts, and we help revolutionize Scope 3 through continuous auditing of supply chains using the additionality of satellite and remote sensing artificial intelligence. As I mentioned, step process where we take an organization from 0 to 100 in their sustainability journey. We deliver an API, an SDK, and white label product service to our clients. And our goal and mission is to scale up sustainable finance and carbon offsetting to reach the 300 gigaton carbon reduction that we need to avoid runaway climate change. Next slide, please. Part of what we're doing is using deep tech AI to revolutionize Scope 3 emissions reporting and carbon offsets. Because right now, what is happening is that many Scope 3 emissions in supply chains are not accounted for. This includes water impacts, biodiversity impacts, social and ecological impacts. We revolutionize that and make it very easy to access this Scope 3 emissions and impacts data. And we also deliver suggestions of how to actively reduce those impacts throughout the supply chains, which eventually the large corporates will need to address in order to maintain their status of being a good corporate citizen. So what we've done is we've delivered an 18,000-fold increase in efficiency in carbon verification with our deep learning models, and is venture backed by the European Space Agency to drive investment and finance into nature-based solutions and carbon drawdown. So the European Institute for Innovation and Technology that co-architected the Green New Deal in Europe backed our decision metric for sustainable finance to meet the net zero goals. And what I should also add is that we're the world's first continuously audited carbon credits API and Scope 3 reporting. What this helps do is eliminate fuzzy data, de-risk loan and investment portfolios, whilst generating new green loan and investment leads to solve climate change. Next slide, please. Okay, so the impact of clients, pilots, or partners. For example, currently we're doing a pilot with Swedbank in the Baltics, Lithuania, which aims to enable corporate and SME customers to precisely quantify their sustainability impacts. The insights gained through the pilot could unlock sustainable finance opportunities to accelerate green growth for businesses. And this is across all loan portfolios. So many banks hold very large real estate portfolios, transport and energy portfolios, as well as the asset management arms. One example of the impact one of our partners is having a UN Convention to Combat Desertification is the Great Green Wall of Africa and the Great Green Wall of India, which together could be $20 billion worth of projects and draw down several billion tons of carbon. And we're working to verify and monetize the carbon for those on-ground partners. Thank you very much.
Thank you very much, Tom. I think last but not least, we have Lars, Managing Director of Agroclimatica from Denmark here.
Thanks, Amrita. Thanks, everyone. Greetings from Denmark. I hope everyone is staying safe. So now, as I've heard them say, to something totally different. Next slide, please. We live in a world filled with challenges. Challenges related to the inclusion of farmers into the financial system, challenges for banks and financial institutions to untap and get untap the potential that agriculture remains, simply because they don't understand the risks that they take by engaging in agriculture. Challenges related to climate change, where crops of the past might not be suitable as the crops of the future. Losses are significant all over the world. But also, challenges related to the digitalization of agriculture for better, decision making, but also to identify the climate smart crops of the future. It's likely that we'll all keep eating, so we need to produce enough food. Next slide, please. So Agroclimatica is a risk platform that quantifies the agroclimatic risk in a loan, meaning that through the correlation of analysis of climate, soil, crops, livestock, and good agricultural practices, it allows us to quantify numerically the risk of a credit application, meaning that we can, on a scale from 1 to 10, identify the risk for specific locations or a farm, for a specific activity, for a specific type of producer, for a specific period of time. If we look at how credits are assessed today, financial institutions pull a financial risk score. So this speaks to a farmer's historical willingness to pay. What we do as a supplement is that we quantify his future ability to pay. So will he be able to produce on this farm during this time with a decent chance of success? So this is where we work. This is the space, and this is the value that we add for financial institutions. When we look into the quality of data, we find that 92% of the data that we emit is perceived as accurate by experts. We see that amongst the users, 91% feel better informed, and 85% are willing to increase their lending into agriculture. So it's a way really to channel and foment lending into agriculture. Next slide, please. We are currently operating we're present in 10 different countries. Been very fortunate to find a niche where there's realized problems, but not any really good solutions. So we're running as fast as we can to offer our solution, not only in Latin America, now also in Africa, and this year also in Asia, working with our excellent team out of Nicaragua and Africa. The methodology is flexible. It can be adapted to any country or geographical area, any type of crop and any type of animal. We work with a bunch of really solid partners, including, for example, Equifax, and we're reaching more and more farmers and through the financial institutions every day. Next slide, please. So when financial institutions use Agroclimatica in their operation, they not only get to increase their loan portfolio, but they also get to decrease their non-performing loan ratio because they cipher out, they manage to filter out the high-risk credit applications. And when we do this, we also gain transparency on a portfolio level, meaning, for example, that it allows on a strategic level to adapt credit policies towards certain area, geographical area, towards certain crops. But we also help to identify opportunities, so climate smart crops of the future. And it's easy to use. There are no investments. It's pay as you use. And you don't need specialists in the front line. You don't need agronomists to be the credit officers. It's very flexible and easy to use. And through this information, we then increase and promote financial inclusion and digitalization. So really, it's all about everyone wins. Farmers wins because they increase access to finance. Financial institutions increase their lending. So as with all good business ideas, there don't have to be a trade-off between sustainability and profit. The really good ideas, they can do both. Thank you.
Lars, thank you so much. And thank you to all of the panelists today for sharing what your companies are doing to tackle some really, really challenging problems. Now, I'd like to turn our attention to our next panel of experts to talk about some of the new challenges that climate change has posed, but also new opportunities that the financial sector is well positioned to help solve. We've received over 40 questions from many of you that have signed up and passed them all along to the panelists. Some of these questions include, how are finance products considered green? What factors would make financial institutions consider sustainability over profit? And how can we measure environmental impact and sustainability? So to address all of these questions and many more, I'd like to welcome Sopnendu Mohanty, the Chief FinTech Officer of the Monetary Authority of Singapore, Thomas Jensen, CEO of Copenhagen FinTech Denmark, and Ray Ferguson, Chairman of STACS Singapore. Thanks to all of you for being here, and I'll request Sopnendu to kick it off. Over to you.
Hi, Amrita. Good to be here talking about a very important topic for all of us. And the questions were quite pointed, and I couldn't help myself to pick three of this list of questions, which I thought I should speak on. One was the Singapore's specific actions Singapore is taking in this space. I will speak on the tech side of the work we're doing, and also talk about ESG careers, which is interesting. People want to get into the career where ESG is involved. Talking about Singapore, our Prime Minister Lee recently announced something called Green Plan for or Singapore Green Plan 2030. He talked about our collective action to tackle climate change. And this is essentially a 5-pillar strategy which talks about city in nature, where you talk about green, livable, and sustainable home for Singaporeans. He spoke about the sustainable living, where we talk about the green commute, green citizenry. Then the third pillar was around green energy reset, which talks about cleaner energy vehicles, Grab out there, greener infrastructure and buildings, sustainable districts, townships, green energy. And the fourth pillar was on green economy and how we incentivize enterprise to shift to sustainable practices. And the fifth one on the resilient future, because Singapore is definitely worried about the rising sea level, and we got to do our own part to keep the climate cool and hopefully bring down the global rising temperature. So that's the broad government plan. But today I'm going to talk specifically about what MAS is doing in this space, because all this requires a lot of financing, and there's a significant financing gap in this space. And before I lay out what MAS is doing, let me give you some stats around why this issue is a serious issue for us to deal with. By some stats, there is an estimate of $2.5 trillion or $4.2 trillion by economists who talks about a significant risk to global financial asset, quite a significant risk on this asset due to climate change. We have seen that the sustainable investing has become mainstream. Almost $30 trillion worth of asset is now managed under ESG investing, up by 34% from 2016. Quite a shift from where it was. And the third point, which is I think most interesting to me, was on the stats that by 2030 there'll be a shift. There'll be an intergenerational shift of transfer of wealth from the current to the next generation, and they are quite tuned to the sustainability, and they're going to make good choices than their previous generation. And that's close to $15 trillion worth of assets changing hands. And in Asia alone, 35% of the Asia's wealth will be in the hands of millennials in next to 5 to 7 years, which is quite an encouraging sign, because the millennials are far more worried about this, and they will make those green and sustainable choices as this wealth get transferred to them. Now, Asia in particular accounts for half of the global greenhouse emissions, which is quite a significant contribution to the global greenhouse emissions. And we need in Asia close to $1.7 trillion a year to 2030 to get into to the goals of the ESG goals which UN has set for all of us. So that's a lot of capital is required in this space, which makes almost like a urgent need for policymakers to respond to this crisis. MAS last year created a strategy which builds around building resilience, developing the green market, and leveraging technology, all the good work done in the fintech space, to see whether you can use some of these fintechs to shift some of the solution to the green finance space. We have released our risk management guidelines. We have announced a $2 billion green investment program with asset managers who are committed to drive the green efforts out of Singapore. We also developed green schemes which will support mainstream green and sustainability linked loans. We are also building center of excellence and also working with facilitating support and expansion plan for rating agencies and reviewers will help to make those necessary capabilities to shift to green projects and green assets. So that's a brief on what MAS has been doing. As an outcome of that whole effort, what's happened last year was we saw in Singapore a 65% growth in our green linked loans. Some $3.5 billion worth of green and social sustainable bonds were issued in Singapore in 2020. It brings to a cumulative of $10 billion of bonds issued in Singapore towards ESG, and mostly this was directed to renewable energies, green buildings, and sustainable water and wastewater treatment. Now, where does fintech fits into the whole space? So what we did is the last year we announced something called Project Greenprint, because for us, we believe that the real barrier to green financing is 6 things: data, trust, an efficient ledger, business model, green technologies themselves, and policies. So we have created a 3-track strategy behind it. How do we mobilize investments, which allows, which are a marketplace can be created where we can fund, discover green fintechs or tech companies who are focusing on green solutions, and projects are looking for green finance. We're also looking at how do you monitor this green projects. We are looking at independent verification processes, data sets, third-party providers who can provide green certificates and measure this KPIs. And lastly, we're looking at how do you measure impact. In fact, a couple of the demos we saw are in this space, how they use technology to measure impact. We are looking at solutions to build that capability out of Singapore so we can measure the impact as we shift our asset deployment from brown to green and blue. So that's what is happening on the tech space. So I'm quite hopeful by next couple of years, we should be able to build collectively some kind of a hybrid green data platform, which brings all this processes, data, certification together and facilitates this great the growing need for green finance in Asia, which accounts, as I said, almost $1.7 trillion worth of investment year over year till 2030. And lastly, to conclude my on the careers part, we have just launched a program with SMU and Imperial College Business School, a program on a degree in green finance. We're also working with a lot of universities here to create certification program. There's a huge demand on talent who are getting skilled in this space. And also recently Moody announced its green ESG focused innovation lab and tech accelerator in Singapore. Hopefully they also kick off some demand as banks and FIs and insurers are looking to hire green specialists. With that, I will take a pause and hand over to my next panelist to talk about their insights in the space.
Thomas,
thank you so much. Yeah, thank you so much. Yeah, and first of all, thank you so much for inviting us to participate in this event. That's super exciting. I've picked up on 3 questions when I read all the many questions that were sent in, and the 3 questions I picked up on was what factor would make a financial institution consider sustainability over profit? I saw also just now in the chat or in the questions that Jeanette asked a question around how green and profitability can coexist, how it can, and what green fintech's role in this is. And another question actually addressed why oil and gas industry must become green. Is it really relevant for the fintech industry to think about becoming green? So I think for the last one here, is it really relevant? I think we've just seen 5 really good examples of why it's super relevant for fintech to become green. And I think also going through the questions, there was a little bit of a feeling, without being Greta Thunberg here, we need to agree that we have a burning platform. There's no planet B, as the sign says. If we do not act, profit doesn't matter. There will be no profit long-term without a sustainable approach. Hopefully we can agree on that. I think at current emissions rates, at least the numbers I've seen, that the 1.5 degree threshold will be crossed in about a decade. So we can say, the reason why we need to act. I think in my opinion, there's no doubt that we need to act, and we need to act now. So this is very much a dual approach. So I think Okay, so these are the three questions I will try to pick up on. Maybe there are also someone that, wondering here, how the whole of the Nordics. We've seen 4 of the startups here from the Nordic and an excellent one from New Zealand here. So how are the Nordics fitting in with this? And I think coming and being part of the Singaporean fintech ecosystem for so long, I can certainly say that Singapore in the financial space and especially in the fintech space is a global leader. I think what the Nordics can add here is a region with a very high and long focus on sustainability in general. If we look at, there's something called the Environmental Performance Index, and it actually says that the number one when it comes to sustainability and environmental performance is Denmark, Nordic country. If you look at the SDGs, and you look at how are we on track on actually achieving the SDGs, Sweden is number 1, Denmark is number 2, and Finland is number 3. The single biggest, largest dedicated greenfield renewable fund in the world is just launched in Denmark by a Danish company. And we just also announced the world's first green energy island at the size of 18 football pitches in the Northern Sea. And the second most sustainable company in the world, last year's number 1, is a Danish company called Rouse. So let's just, when it comes to sustainability and environment, I think the Nordics also certainly have something to offer. And when you marry those two things, like the heavy focus on sustainability and environment with Singapore's leading position in finance and in fintech, we have a really interesting combo, which hopefully you already have seen now. So just to get back a little bit to the questions here, I think financial services in general, and I think a little bit from the ecosystem that I come from, is a little bit underplayed here. So financial services in general plays, and I think also Sopnendu in previously made an excellent point in this, plays an immense important role here. There's a huge need for investments, and if you need, I think there's numbers being mentioned here around $3 trillion every year that needs to be directed into renewable energy. As Sopnendu mentioned, 68 trillion in wealth will actually shift hands in the next 25 years. So it's actually not that much when you think about it, that needs to change into the green space and into green finance. So there's a really huge opportunity to exploit here. And I think also when it comes to what actually matters, I think sometimes we have a tendency to discuss maybe not always the right things. We have a tendency to focus a lot on flying less and eating less meat and taking the train instead of the car. And that's, of course, I'm not saying that shouldn't be part of the equation here. But if you look at actually doing the single most important decision that we can do to actually accelerate a more sustainable world, that is actually to change your pension savings into sustainable funds. That's up to 27 times more efficient than some of the other things that I just mentioned. So that goes without saying that financial service is just so important when it comes to accelerating a better future. And I think if you look at some of the headlines, that is why this is important. First of all, it's about access. And I think, again, coming back to the 5 companies here, you all proven that it's all about access, like greater accessibility to make climate-friendly decisions. It's about efficiency. It's about faster processing power and more informed decision making. It's about transparency. It's about increased visibility on data and money flows of transactions. It's about accountability. It's about verification and enforcement of, for instance, that we also saw just in the 5 companies here on carbon commitments, just to mention an example. And I think there's a 5th one also where we need to talk about education, because we talk about it like it's, everyone knows this. And there's, this is about all stakeholders learning about the climate challenges, realizing that this is a real problem. This is not something we can talk about and then discuss terminologies and regulation and stuff like that. It is happening now, and we need to act now. We need to create that urgency through education. And I think fintech solutions, green finance, this is making everyone able to participate with their financial assets. And I think when we talk about our financial assets, we also need to talk about it, not something that lies in a financial institution. Of course it does that, but this is our money, and we have the right and the ability to actually move it where it matters most. So this is about us, everyone here in the call, making a decision to change those funds. So I think that was my 2 cents, and I think Ray will have some really interesting perspective on this also.
Well, thank you, Thomas. And you've already made me change my opening of my talk, because you labored quite heavily there on the choices people need to make in terms of investments, in terms of pensions. And although I'm invited here today as the chairman of STACS, which is the capital markets infrastructure player, I also chair a large insurance company here in Singapore, which is grappling with exactly those issues in terms of how you bundle product and bundle 10 and 20 and 30-year investments together that are going to be suitable for. And I think back to Sopnendu's point, that there's a new generation of people coming through that are just not going to buy any old thing. Yeah, and right now there isn't a lot of choice. Yeah, and I think it's so this wasn't kind of where I was going. I was going to actually pick up on a question on greenwashing and how you measure this, but I just think at the heart of this, I think Thomas has got a really important point, because what companies receive investment, what companies are successful in receiving capital, whether it's in loans, whether it's in bonds, whether it's in equity, public or private, that is going to help them innovate. And I pick up the innovation theme in this space because Thomas used the word burning platform. This is a massive issue. This is not easily solvable at all. And I think it's not going to be solvable with just doing more of the same around renewable substitution, a bit of efficiency, a bit of pollution prevention as we're currently doing it, or someone says fly less or eat less meat. It's much bigger. So I think where financial institutions come into play, Sop mentioned the Singapore initiatives, particularly around the most recent piece around what's happening in the whole green print and the green agenda around support here. I think FIs have a leading role in any economy, and particularly here in Singapore, there's been a key pillar of the economy, and will be going forward. And I think we have got now, I think, a coalescence of views that we need to put this much greater accountability in figuring out where a dollar's going, and are they going in a sound growth, good green way or not, and to what extent is the data able to help force change. And a couple of the startup or the companies you heard from the beginning, I thought it was really interesting because they're really good digging down and providing data, which is if you can't measure it, it's not going to mean much point, which is really great. So I think one of the questions I wanted to pick up on was, how do we begin to measure this in an FI sense much more powerfully? Sop mentioned various initiatives we have to have green bonds and green loans in the system. Today, it's a very tiny fraction of 128 trillion bond market is effectively being put out there as green bonds. But we at STACS, who provide capital market settlement systems on an immutable, trusted, proprietary Singapore-based blockchain, we believe that by linking smart contracts to bond and loan distribution of the actual proceeds, by having the feed from data from suppliers and people such as Earthbanc or others that could be providing truthful information into the smart contracts, so we can get a place where we can distribute loans and bonds in a way that we can be pretty certain that this is not just greenwashing. I think that is then going to allow reporting for financial institutions to be driven by the regulators to start to actually say not just how much is your portfolio in coal, but on a much broader, much more scientific, and much more sensible basis, where the dial is moving in terms of that investment pace, and that will lead investment into them. That will lead investment into funds that they manage, investments that they advise on, and really picking up that next generation. Again, it was mentioned earlier. It's a generation of young people that have a lot of wealth being transferred. But I think it doubles up because it's these people also coming up in their careers as decision makers of other people's money, as they're employed as asset managers, fund managers in the decision-making capability across the world, rather than just also the family side. So there's a step shift here, which bring us forward. So measurement, accountability, the immutability of that, together with how innovation can be accelerated, and there's a lot in there around tax policy and other government help that could come around this. But I think the word greenwashing was come up in one of the questions. Look, there's an element of that helps move the doubters and the non-believers, and it helps give visibility and helps people want to follow and try. That is okay, but I think as we go forward, these will be serious regulatory issues that will affect people's capital, the prices that are paid for capital, the prices that are paid by ultimate borrowers for loans, bonds, etc. in the future. That was just really picking up on a couple of the points that hadn't been covered. Amrita, I don't know how you want to facilitate the question.
I think, Ray, I was thinking that responding to your intervention, I think what I'm seeing is a continuum of 5 Ts between what you said and what Thomas said and what Amrita and the presentation were talking about. There are 5 Ts. There's a taxonomy, there is a technology, and there's a transition from brown to blue to green. There's a transfer of wealth from people with brown wealth to green wealth. And people who miss out have the last 5 called the taxation. So if you get this frame right, the 5 T's, I think we have largely got into the right frame of reference when you talk green finance. But from other technologists, I think we have a significant role between technology, transition, and transfer. And if that's roughly speaking, global wealth is $300 trillion. Even a 100 basis point allocation to technology is $1 trillion opportunity for fintechs who are going to focus on making this technology transfer, transition and transfer. So I think collectively we have a role so that we can incentivize the shift. I forgot to mention in Singapore also that MAS has announced quite a small in terms of the overall number, a $50 million of incentive for anybody who wants to write software in either of the 3 stacks. So if anybody's out there who's interested to solve the technology transition and transfer, please do speak to us because this is real. We got to collectively fight it out.
Yeah, I would just add to that to everybody listening that at STACS we've been very well supported by the MAS through multiple rounds of awards and grants, and indeed are engaged in this process. And what he says is real. Yeah, this money's there to be deployed.
Well, I didn't talk about the taxation. That's somebody else to think about, but that's going to be eventual if you miss out.
Yeah, thanks.
So, so I think what maybe Thomas, you would like to reflect on any particular example which came to your mind, which is helping, like people like ordinary people like us. How do we change our behavior so that we start collecting these little reward points called carbon points, where I can go and encash for something meaningful? Is there anything what you're seeing in Denmark as we speak about this? This
I'd say talk to Dave. He's like, say that's me. That's me.
Okay. So I said, so Dave, who's going to respond to this? How do I collect my carbon points?
Yeah, let me just briefly, and then I'm sure David would elaborate more. But Dave, I think what is really interesting, and if you look at, if we take a term like open banking or the PSD2 in Europe, right? So giving people or giving companies access to consumers' transactional data, and actually starting to see the footprint or the impact of your buying behaviors, and actually making them capable of making smart decisions based on that. And that brings me a little bit into something I was thinking of, because there was also some questions saying, around, how can technology accelerate? And I think the only way to solve this problem is actually using technology. And I think there's 3 technologies that is crucial in this area. Also to answer your question, Sopnendu. So that is, of course, the whole big data. This is a data, for me, this is a data play. Very much a data play. This is around the application of artificial intelligence. We've seen that through many of the startups presenting here. And then I think Ray has an excellent example in the application of blockchain and distributed ledger technology in general. So I think when it comes,
can I push you on that data thing a little bit, because that's a very good point. And I want the audience to hear this from you, because one of the challenges in Asia we face is transparency, because any data you share can cause unintended consequence of certain thing you don't anticipate, in terms of things can go wrong, perception can get created, because the economic trade-off between green data or green behavior and the pricing can cause a lot of transitory challenges. How do you expect people to be transparent on data while we have not figured out the economic suitability or economic viability of the switch? Where are your thoughts on this particular challenge, especially in Asia, we face this?
Yeah, and I think, if I understand you correctly, I think at least what we've seen here, this is about the exchange of value. I would very much like to give my data and use the solutions if I get a little bit what I mentioned before, like access to an informed decision. If there's an efficiency, if there's transparency and there's accountability, and it educates me. If you focus on these points, and I think coming from the Nordics, where there's such an inherent trust, so we tend to pick up on solutions like this very easily. And I think we have seen that to a very big extent to what we see coming out of the open banking space, with giving people access to data, giving them access to knowledge about their spending patterns, and then based on that, acting on smart climate decisions. And those 3 core technologies for me is and I think especially what Ray is, when the blockchain and the distributed ledger technology has a huge potential in this area. Naveen, you pointed a little bit towards Dave. Yeah. And I think
yes, I think Dave has to tell me how to put the point.
Sorry, did you want me to pipe in here?
Yeah, please, yeah. Dave, tell me, how do I collect my points?
Yeah, so
you're not collecting your points, you're giving away your points.
No, I want to collect the points so I can trade off.
Yeah.
Yeah, effectively, if people don't think of points like they think of money, and this is our learnings, is that it still costs the bank or whatever to issue those points. It still costs them money to run those programs and to then buy something at the tail end of it. But what we find is that people spend those points more frivolously than they spend money. And people have this inherent need that they want to offset their carbon, or they want to reduce their carbon footprint, but they a lot of people struggle to build that bridge between actually paying to reduce their carbon footprint. And points are a really easy, low barrier for people that say, hey, I want to do some good and I don't want it to cost me any money. That's where points are a really good way for them to convert those points to offsets. And we've seen just with the in New Zealand with the largest rewards point scheme that we've just recently gone live with. In fact, it's only soft launched, so it's fully launched on the 31st of March next week. We've already seen, really high uptake when you compare it to air points as an option. So that's really encouraging. It's I know at the moment it's probably an unfair comparison because a lot of people can't fly to a lot of places right now. So perhaps air points are less attractive. But what we're seeing is this pent up frustration that people want to do good and they don't want to pay to do good. So this is an easy way to do that, and it's engaging them to use those rewards cards more because they actually feel like by swiping that card and using that, that rewards card, or in a bank's case, that credit card instead of another bank's credit card, they can actually do some good, and they feel great about that because we complete that journey with showing them a receipt of exactly where their carbon has gone, and they can track their progress. And that's that end customer journey bit that we complete.
I think we have a couple of more minutes. Can I ask two questions? One to Amrita, one to Ray. Let me start with Amrita. I don't want to put you on spot because you have an interesting company because you manage car and fleet, which is a big part of this whole problem statement. But you also have a responsibility to transit to a green economy with a balance. How you're thinking about this thing, that's for Amrita. And for Ray, you have a solid experience in insurance industry. Maybe I'll stress to pension industry. Where do they stand in this space? Because you have a very interesting way to incentivize that shift in the behavior with the right insurance and a pension structure. So first, Amrita.
All right, thanks, Sap. So I am not here in my capacity as driver lending manager for Grab, just the moderator today, but I can say that, Grab does, we have a strong mission, especially on empowering our customers. That could be our merchants, that could be our drivers, and even our mass market consumers. So that is a deep part of our mission. And I think personally, in thinking about the financial services that we're offering, especially to our drivers, we look at them holistically, like how are they, obviously there is a bottom line that we have to think about, but we also, definitely take into consideration what are the externalities of the products that we're offering. And we want to make sure that we're never doing anything that's predatory to our drivers, but also to the environment. So I think that's all I can say on the subject without getting in trouble, but thank you so much for thinking of us.
Ray, the last question for you.
Yeah, no, thanks for that. So I just took over the chair of Aviva Singlife in Singapore. It's a traditional insurance company that's come together with a more disruptive player. I think if you look at the status internally today, a lot of effort to be done on what would be putting things digital to save waste and save post and all that kind of stuff. I think these kind of efficiencies in if you like, in just saving usage of things is one thing. But as we sat as a board, maybe in early February, trying to figure out how the compensation scheme is going to work for the new company, there was measures in there for digital, for how people are managed, how risk is managed in an insurance and actuarial sense. There was zero presented in the original papers on environment or sustainability at all. So we've been remolding that, and we're now going to have a multiplier up and down on the overall group bonus scheme linked to various measures here. But the effort that we want to put in first up is on the investment side. That is where it has not been a feature really at all. So when we buy a REIT based on what the manager wants to recommend from a pure return basis. We don't stand back and say, is this REIT green? or is this REIT half green or better green or whatever? And in the market now for a new chief investment officer, and one of the criteria as we go through that interview process is, be able to use this not just as a feel good and we've got it in our goals, but this is a customer opportunity. This is an opportunity to get the hundreds of thousands of customers we have that really get this, and get them to do more with it because we provide the opportunities for them in the investment and in the way that products are packages. Even potentially giving them CarbonClick points or whatever they need to feel that we get it and that they're contributing and that their money's being channeled in the right way.
Thanks. Amrita, all yours.
Amrita, you want to help us close it?
Yes, I can. Thank you, everyone, for these really valuable insights. But that is all the time we have for today, unfortunately. So the audience that's still here, please join me in giving a big thank you to all of our panelists and change makers, as well as APIX for their support, and Naveen for putting all of this, and Jean and Yoru and Shaf for putting all of this amazing work together. So thank you, everyone, and have a great day.
Thank you.
Stay green.
Bye.
Thanks, guys.
Thank you. Thanks.
Bye.
Thank you.